This is Made for More Living with Johnny Jennings. Online at madeformorerealty.com.
That was fun having Shannon on the show.
Yeah, absolutely.
Looking forward to having her back, and can't wait till we have more transactions under the belt together, because, man, that girl is wicked smart.
Yeah.
But let's talk about some current events. I know you had some questions about the
President Trump announced, and this is a big conversation that's been going on, not just in the real estate market, but I think, was it Dave Ramsey? They announced that he's having a heart attack, or
he'd gone cardiac arrest.
Yeah, he had cardiac arrest when he found out that President Trump, and not just Trump, but the whole administration, what is it, the Fair Housing Department, announcing an idea. It's not yet implemented, but a 50-year mortgage loan, because they think it might stimulate the economy, providing the opportunity for people right now who can't afford a home, that maybe if they're offered a 50-year mortgage, I mean, can you imagine that, a 50-year mortgage, that maybe it stimulates the real estate market, and you got more people that can afford to purchase a home. But of course, Dave Ramsey, he doesn't even like 30-year loans. He thinks the 15, most you should have is a 15. So imagine a 50-year loan. Oh my gosh, nobody's going to pay off their home.
No.
What are your thoughts on that? Good idea, bad idea?
So at the core of it, the 50-year loan is trying to solve the problem of affordability, right?
Yeah.
And all it's doing is it's just kicking the can down the road. The problem is that home prices and wages are not in alignment.
Mm-hmm.
So either prices need to adjust down or home prices need to go up. Or now here's this third option where you can now, by increasing the term, drive that monthly down. And so selfishly, as a real estate agent, I think it's a great thing, because there's going to be more people moving into the market, more people purchasing homes. There's going to be more sales taking place, and a real estate agent gets paid when a sales takes place.
Mm-hmm.
So I think selfishly, there would be a benefit to me. Long term, though, I don't see how this solves anything. So if you rewind the clock back, it used to be like 20% down was what you needed to get a home, and then they changed that. And now you can get a home down. There's 0% down. There's grant programs. There's like low money down programs.
Right.
And these are quality loan products. These aren't like predatory type loans, but they did that to improve housing affordability. And what did it do? It just drove prices up. And now, if you're going to introduce a 50-year loan and people are comfortable with a $3,000 a month payment, are they going to now all of a sudden, if the house they wanted was $3,000 a month, but now they can buy a way better house,
right,
and still have that what are they going to do? They're going to buy the more expensive house.
Yeah, that's
true. So now you're just going to drive prices up, and then in a matter of years, we'll be back to where we are right now. So then the question then becomes, well, do we get a 60-year loan or a 75-year loan or a 100-year loan? And how far do you push this out? And it's really just a Band-Aid. It's not solving the root issue. So,
but you can always refinance, right? You get in, and then
that's a great
refinance.
That's a happy thought. But there's a lot of people who were told date the rate, marry the house, just refinance later.
Yeah.
Well, if they purchased in late 2021, many of them are still waiting to refinance years later.
Right. Well,
and so let's say you go to sell the house and you have a 50-year note, and the home prices haven't appreciated a whole lot. Well, guess what? You know who the real winner is? So this is. And I'm not saying this is Trump's heart in this. I can't speak to that. But the real winner in this 50-year loan program are the banks, because the mortgages are front-loaded with interest payments. So when you first buy a house, most of the payment you're making is in interest, and a small portion goes to principal. And so what's going to happen over this 50-year program is you're going to pay way more in interest to the banks. So the banks should like this program.
Right.
But the problem is if you go to sell the house in 5 to 7 years and you have been making the small principal payment, do you have enough equity to sell the house?
Oh, probably not. No.
Right?
Absolutely
not. And so now we're back in the spot where, hey, nobody can afford to sell their house because the house needs to be worth so much more than what the market currently is.
Yeah.
So I think it's a buzzword. I think people would like it short term, but you look up 10, 15 years from now, they'll be like, what the heck did we do?
Well, I mean, the interest rates aren't dropping as fast as President Trump would like. And you've got a lot of...
That's a good thing. That's a good thing. So the interest rates, they've done 2 price adjustments. Since Trump has been president. You know where interest... Small.
Quarter.
They've done quarter. So anybody can have access to this. It's called Mortgage News Daily.
Yeah.
It's an app. It's a website. You can go on there. before they did their first rate adjustment this year, the average 30-year note or 30-year interest rate was 6.15%. That was the average. Mm-hmm. They've done 2 since then.
Yeah.
It's at 6.34 right now. So just because the Fed drops the rate does not mean interest rates are lower.
So explain why that is. Do you understand why that is?
On a very basic level, it has to do with like people buying like bonds. And they're still in government debt, but people are not confident. There's a couple different things. Domestically, people are not confident, and internationally, people are not confident in the strength of the economy and the U.S. dollar. And so they're not going to buy American debt, because they're worried about what that's going to look like. And there's other investments out there that are doing better. So I think the Fed, honestly, and I've said this before, I think the Fed has lost control, and Trump's pressuring them to do something, but they're like, dude, we can't. We could drop it to 1%, but it's not going to change anything. Mm-hmm. It's not going to drop. Like banks are not going to lend at that.
Okay.
And so by doing those two adjustments, a total of 0.5%, interest rates are still higher than where they were back in September. So I think the Fed has lost control of that lever. That's my personal take on it.
So if we're stuck into this position, right, where it doesn't look like interest rates are going to go down, and you've got all of these people, especially younger folks that are growing up and they want to start a family, they want to own a home, but they can't. And isn't this 50-year mortgage a solution?
No, it's not a solution, because let's rewind it. Why do you want to buy the house?
To raise a family.
Okay.
To have the American dream.
Okay, and so we're talking about money. So what's the financial benefit to owning a house?
Well, for everyone, it's not necessarily a financial advantage. For some folks, it's just they don't want to rent an apartment. They want to live in a home.
So why don't you just rent a house?
Because that's not economically sensible either, right?
I think with the 50-year note and where we are right now, it is. Because there are so many people right now who bought between 2020, 2021, we just sold a house in January. The person that bought the house, I don't know what happened in their life, but they are short selling the house. They're upside
Some folks,
down.
Get into financial situations where, they have to sell it quickly. But wouldn't you agree that for most people, they're in it for the long run? It's all about the monthly, right? They just need to get into a home that it's all about the monthly. And even though it may not be as much as a 15 or a 30-year mortgage, they're putting money into the home, into it's an investment,
It's not an investment. Investment puts money in your pocket. If you're paying it out every month, that's not an investment. That's a liability.
But you're paying down
You're paying the bank. That's my point, is that I don't think you're going to pay down the interest, the principal, enough to keep up with the cost of what you're paying out in interest and maintenance on the home, property taxes. And so let's say you have a 5% interest rate on your home. Let's say it's a 4% interest rate on your home. Well, on average, homes appreciate somewhere between 3 to 4% each year. So you're not even keeping pace with inflation.
Right. I hear you.
And so I think what this is enabling people to do is buy a property that they can't afford in the first place, and then just kick the can down the road. It's not moving them into a better financial position. What I would be interested in seeing is a 50% note, maybe on more like investment type properties. So if you put a certain amount down, you can have a 50-year loan, and now that family that before wasn't able to buy an investment property is now owns a single family home, or owns a duplex, or owns a fourplex, and now has cash flow coming in. If they do that, that would be way better for that family long term than getting a 50-year loan on a home they couldn't afford in the first place, and they needed that 50-year loan to make it work.
Yeah, interesting.
But that's not what people are going to do. They're gonna buy the house, and people will need to stay in their homes longer. If you're paying down, if you're paying down the loan slower, you're going to need to stay.
It's a bigger commitment for sure.
You're going to need to stay in the home longer to upgrade to that next property.
It's just like when you purchase a car. Now, home loan or car loans are at least 5-7 years now.
Yeah.
When I was young, it was 3 years, and now you're committed to that car absolutely for a lot longer than you used to be. So
I think 2026, if it continues the way it's going, is going to be a better year for real estate agents. If they introduce this 50-year home loan, it'll be a phenomenal couple of years for real estate agents. But stack that cash high, stack the paper tall, because when everybody buys the house that can now afford the house on the 50-year note, nobody's moving.
Right. It's a good point, unless interest rates are down and they can refinance.
If.
Yeah.
But here's the thing. Every time somebody buys a house, that's just going to fuel inflation, because they're buying a house. Let's say they put 5% down, right? Where's the rest of the money coming from? It's coming from a bank that's lending it to you, that just printed the money. And where's the bank getting the money? It's getting it because it borrowed it from the government. Right. And so it's just part of the reason why inflation got out of hand was because of the low interest rates and the number of people that were going out buying houses, among other things.
Sure. Yeah.
Right. And so by introducing this is just going to, in my opinion, hurt inflation and keep those interest rates high.
Yeah. Interesting perspective. Yeah, absolutely. I agree.
Nobody else has
No.
this
It's
up?
no, absolutely. Yeah, it's a debate back and forth, because people want to see, especially Trump supporters, they want to see the economy. Everybody wants to see the economy improve. That's why they put President Trump into office. They want to see interest rates go down. They want to see grocery prices be more affordable. They want to see the housing market improve. And so they're looking at different strategies. So whether or not they agree with this 50-year, I think they're in a similar position as you are, is that they understand that it's not the perfect solution, but it's something that could help some folks who are really eager to purchase that home, and because of interest rates really can't afford to get into a home right now. And so maybe the 50-year mortgage plan helps bring down their monthly payment. So it's an idea. It's not been implemented yet, but this is why we're having this conversation. And look at the
but everybody's
pros and the cons.
Everybody's talking about improving the economy. What does that mean? Like gas prices are down. I'm seeing 3s now.
Not in California.
In California, I drove past a couple different places that had 3s.
Grocery prices going down, gas prices going down, the job numbers being a little bit more positive than they have been. Not seeing company after company after company laying off thousands of employees.
But that is what's happening. And so my point is like, when's good enough? Right? If we're being honest,
that's a great point.
That is never going to be
It's
attained.
never good enough.
If you hire the Democrat will do better. If you hire the Republican's going to do better. If the Republican's in office, give us longer, we'll do more better. And it's like
true.
It's a nebulous
never
thing.
Good enough.
It's never going to be good enough. And so that's why you need to work with Made for More,
there
because we are good enough. Expect
and
more.
There's
and
always more. You
Expect
get more.
Get more. Yeah, more house. But when we come back, we're going to be talking about the special thing happening right now in real estate.
We are just weeks away from the year 2026. Can you believe it? Wouldn't it be great to start off this new year on the ground running? Well, it can happen with our friend Johnny Jennings with Made for More Realty. He can either have your home already sold or everything in place before we even hit 2026. So if you want to find more information and find out how you can get at least 3 cash offers on your home in as-is condition, or read some of their 1,000 5-star Google reviews, just Google Johnny Jennings with Made for More Realty and get more for your home.